Coming up, shoppers trading down, looking for cheaper alternatives, but they're still happy to fly, and the latest market views. That's next. It is your daily 10-minute business and finance news wrap for this Tuesday, the 30th of May, 2023. Later, the opportunities for investors on the share market, which closed slightly weaker today. The S&P ASX 200 off by 0.1%, 7,209 points. For more, I spoke with Josh Gilbert, an analyst at Etoro.
Yeah, as you say, Ricardo, a bit of a muted session, and that sort of comes after a pretty strong start to the week yesterday. We've really struggled for some direction today. We didn't have that sort of lead that we would usually get from Wall Street, given the sort of public holiday overseas. We didn't really get much economic data today locally, or any sort of corporate news as well. So yeah, really struggled for direction today, traded in a really sort of tight range. And I think investors are still sort of digesting, that sort of debt ceiling news, and also going a little bit risk off as well before that inflation data this week.
That tentative agreement to lift the US debt ceiling, are there still risks associated with it?
Yeah, absolutely. I think there are still risks there because, as you say, it's a tentative agreement, and this isn't over the line yet. But it feels as if markets know that there is so much incentive to sort of get a deal done, that it's sort of, unfathomable that it won't sort of get across the line. That's why I don't think we've seen markets really blink over the last week or so with this news. We've still got US futures in the green, and we may see a bit of a relief rally depending on obviously how talks progress in the US tonight as well. But I think much of that good news is already sort of priced in, and there is certainly still risks associated as we move forward.
Locally, we've got an inflation report out tomorrow, the CPI indicator. What's expected and what will the possible ramifications be?
Yeah, absolutely. So I think that's going to be the focal point for the week, really. Expectations are for inflation to actually pick up, so to 6.4% in the monthly reading, up from the 6.3% that we had last month. And I think that just points towards that inflation isn't easy to fight. If we get a number that comes in maybe above 6.4%, I think the expectations then grow again for another hike from the RBA, because markets are pricing in the peak of rates right now, and that the RBA have sort of finished, and they're likely to pause in the next meeting. But a weaker than expected number there, given that we had weaker retail sales, weaker unemployment data, will likely mean that the RBA will hold rates and pause at the next meeting. But one look overseas shows that sort of inflation is sticky. It is tough to battle. And Philip Lowe has been clear that more rate hikes will be ahead if they're needed. So I think investors shouldn't maybe get too ahead of themselves, because there is still plenty of uncertainty, especially when it comes to inflation.
Even though the market was pretty quiet, there was still some interesting news. We had two investor updates from a couple of big players. First of all, Wesfarmers. What did you make of it? Because I note that the company said consumers are continuing to trade down to value or cheaper products. And that's a space that Wesfarmers operates in with the likes of Kmart, for example. What do you think?
Yeah, absolutely. I mean, this environment does bode well for those sort of consumer staples, sort of names, and ultimately we are going to see consumers starting to downtrade. Retail sales, last week obviously came in flat. Consumer budgets, household budgets are being squeezed from those, consecutive rate hikes that we had from the RBA. It's largest in obviously over a decade, and it's going to be, a tough environment for people. And I think that's where, people will turn to sort of businesses such as Kmart. I think there is going to be, a bit of a tricky environment for them, especially for Wesfarmers. When you think of, something like Bunnings, for example, that is a key part of their business that helps to drive profitability. But we've seen, business very similar to that in Home Depot struggle in the US in Q1, because ultimately consumers are maybe not deciding to do some home improvements at the moment. So I think it's a bit of a mixed bag for Wesfarmers, but certainly that sort of Kmart business is certainly going to benefit in this current environment.
The other one, and it's a company a lot of people like to talk about, it's Qantas. It says margins on international flying are expected to double by 2030. It's investing in technology like its app, and at the same time it says its frequent flyers continue to prioritise travel over other categories like entertainment and beauty, for example. So what's your take on the company, and what does it say about the consumer right now?
Yeah, well, I think it's been a great year so far for Qantas, and the good news doesn't seem to end, I think, for Qantas shareholders as well. As you say, those stronger and margin and earnings expectations to sort of come as well, and obviously, on track for a record year this year. I think that's been really good for shareholders to hear today, because it shows that maybe this year won't just be a sort of a flash in the pan, and that growth should sort of continue. Travel is in a real sweet spot right now. It's got soaring demand, limited sort of supply, with obviously a lot of planes offline as well. And unfortunately for consumers, that means that those sort of soaring airfares aren't sort of going to be going away anytime soon. But I think what it says about the consumer is that they aren't willing to sort of give up on something that was taken away from them for a couple of years during the sort of the pandemic. And, we mentioned, about sort of Wesfarmers there and down trading. Consumers are probably rather going to choose to fly overseas or fly domestically for a holiday rather than sort of doing those home improvements. And I think, as I say, consumers are probably feeling, a little bit positive about their job security and wages here in Australia. And they're feeling happy to sort of travel again, as I say, taken away from them for a long time. And I think Qantas is in a great position to continue benefiting, from this rebounding travel demand that we've seen and looks set to keep continuing.
And just finally, in this environment right now, where do you see the opportunities for investors?
Yeah, so look, I think there's a lot of uncertainty still happening. We've had conversations there about sort of inflation, debt ceilings. There's always going to be something for investors to sort of worry about in markets. But ultimately, we think that markets are probably, deserving a bit of a breather. They've had a great start to the year, but there is still a lot of risk hanging over markets. A lot of what is priced into markets right now is the expectation that inflation continues to fall and that rates begin to be cut and keep coming down. Well, with what we've seen in the last sort of week or two with US PCE inflation data, and obviously if we get stronger than expected inflation data this week in Australia as well, it shows that inflation isn't coming down as much as we sort of first thought. That means that we're seeing some value in defensive assets that are well positioned to benefit from what is going to be a global slowdown. So thinking those consumer staples, those utilities types of names, they are less exposed to these sort of rising economic risks. And the Fed, the RBA still raising rates, keeping rates higher for longer. Their valuations look more attractive. And I think we believe that they will continue to perform well in this environment.
Josh Gilbert from Etoro there. This SBS On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decisions.